inside week on ES means there's a large move coming soon. Here's what to watch for to make sure you don't miss it. Last week, ES saw big rotations up and down inside a large range inside the sell-off candle from last Friday. Now this is exactly what you would expect after a 250-point move straight down. First a retracement of the sell-off, then consolidation with elevated volatility inside a large range. And this range consisted of a demand zone at 65.89 and two important supply zones at 67.20 and 67.64. Then a key mid-pivot at 66.54. Price action cycled between short squeezes to the upside and liquidation moves to the downside off of rejections of supply zones. So we started out the week gapping up, clearing 66.54, holding it on a back test, and then seeing that short squeeze move into 67.20 where we rejected, and then made the full range traversal down to the bottom of the range into 65.89 demand. This held, we put in a failed breakdown at the bottom of the range, and we got the full traversal and short squeeze right back to the top of the range. And you can see every time 66.54 failed and then reclaimed, shorts were offsides, and we got that offsides short covering move back into supply. So midweek we had the full range traversal directly into the supply zone at 67.64, which was rejected. Then we switched back into liquidation mode and a strong sell-off back towards the bottom of the range. This time we get all the way down to the demand zone at the bottom, put in a liquidity trap below 65.89. The reclaim and failed breakdown of the Tuesday low at 65.93 started another short squeeze, and we get the full traversal right back up into 67.20 on Friday. So with a range of this size and increased volatility, there were tons of setups on both sides. The best long setups were plays around reclaims of 66.54 and then failed breakdowns near the demand zone, and we caught both the 66.06 failed breakdown here for full traversal up, as well as the failed breakdown below the zone and reclaim again for that short covering squeeze right back to the top of the range. So in general, once we put in failed breakdowns and reversals off of the demand zone, you really had to just ride long runners and avoid trying to short any of the momentum, because these reversals always push straight into the top of the range. And then the same thing on the other side, once we rejected the supply zones at 67.20 or 67.64 and we started selling and getting the traversal down the range, you really had to either be short or sit on hands and avoid trying to fight the momentum, as this usually got all the way back down to the demand zone. On the short side, the best short setups this week were rejections. The first two rejections of 67.20, the first rejection of 67.64 demand zone. There was also another opportunity after being unable to sustain above 67.20. The failure there led to that full range traversal down to the bottom of the range. Now let's talk about how to trade next week. We are still trading within the sell-off candle and have established balance here with an inside week. So objectively, this is neutral as to which direction it will break. However, Trump's pivot headline on Friday and the trap below demand and the ability to reclaim 66.54 does give a little bit of a lean to the upside. It does favor continuation back towards 67.64 early next week. So within this range, you'll want to continue to use range rules, fade the edges, and then monitor for continuation above or below the range for the trend move up. And that means buyers will need to clear 67.64 to get back to 68.08 and likely new all-time highs. And on the downside, the failure of the demand zone at 65.89 and especially the prior week low would be the failure of this entire base, which would likely see continuation into 65.16 and potentially 64.59. Key pivots for next week are 67.64, 67.20, 66.54, and 65.89. Early in the week, for looking to the downside, you can see if sellers are able to sustain below 66.54, which would potentially favor rotation back to the bottom of the range at that 65.89 demand zone. Now let's talk about the top trade setups for next week. On the long side, things to watch for would be acceptance above 67.20 early in the week for continuation to 67.64, and I would also watch for any traps below 66.54 on back tests. More liquidity grabs underneath here again will continue to put put shorts off sides and see that reversal move back into 67.20. If 66.54 fails and we work back down towards the demand zone, watch for longs into 65.89, and especially any failed breakdowns, failure to sustain underneath the prior week low of 65.72 and reversal back above there, especially any traps below the prior week low that reclaim 65.89, likely would see a reversal move back into the 66.54 mid pivot. Top setups to the downside, the first would be the look above and fail of the prior week high, which would be the second test of this 67.64 supply zone, especially any spikes above that fail back underneath the prior week high would then favor continuation to the downside towards 66.54. The larger play to the downside would be if the bottom of the range fails at 65.89, especially if it fails and then is reoffered and fails the prior week low. You would probably want to look short for a move first into 65.16 and then 64.59. Overall, we're still in a large balance range, so day trade this both directions against the edges, watch for reversals on any traps outside the range, then monitor for continuation if one side breaks for that trend move away from balance. That's how I'll be trading ES this week. If you want to join us and trade live with real pros every day, join us at Trade with Insight.